Hi, Lee Phillips here. I'm going to talk about one of the three what I consider major tax techniques. One is shifting income. I have another audio, video, whatever these are called on that. Two is postponing the income. We're going to talk about that. And the other is changing the nature of the tax. Let me talk about postponing the tax right now. Well, you understand that there is a value to your money. If I keep my money and don't send it to Washington, D.C., I can invest the money, I can make more money, not a bad deal. However, once I pay the tax to Washington, it's gone. So the concept is, let's keep the money back and not pay the tax until we have to. Now you're all familiar with exactly what I'm talking about. It's called an IRA. You get a tax deduction for putting your money in. This is the standard, not the Roth. The standard IRA, you get your deduction for putting the money in, money grows without the tax, then you pay the income tax at the end. I've postponed the tax on the money that I earned this year. The 401k does exactly the same thing. There are lots of things that postpone the tax. Give me another example. How about a 1031 exchange? That's where I exchange like-kind property. Now they usually consider like-kind property investment rental property for another investment rental property. I sell the first property, I don't pay the tax, I roll all the money into the second one, and I can just keep doing this daisy chaining it down for a long time. But ultimately you have to pay the tax. Biggest question is the tax going up or is the tax going down? If the tax is going to go up, maybe I want to take my money off the table right now. So you got to think about that. But it's a good idea generally to postpone the tax and pay the tax later. 1031 is a way to do it. All your retirement plans, your benefit plans in many cases, the 125 plans, the HSAs, the HRAs, all of these sorts of plans basically postpone the tax. If you're really fancy, you can set up a corporation taxed under Chapter C of the IRS code. That can have a different tax year. So I can stagger my personal tax year with my company's tax year, and I can get a little bump in that I can use the money longer. But you've got to have a lot of money and play that as a pretty sophisticated game. So no, you and we're not going to do that, but it certainly is a possibility in some cases. If you have large inventories and stuff, it may work well. Lee Phillips here, talking on postponing the tax.